Ever find yourself like glued to your banking app?
Yeah.
Yeah, watching your balance like a hawk, especially after, say, you just paid some bills,
Yeah.
or maybe you're hitting refresh on your investments, riding that wave of woohoo, it's up,
Hmm.
followed by 5 minutes later, uh-oh, it's down.
Yep.
Today we're diving into a topic that might seem kind of niche at first, Forex money management.
Okay.
But stick with us, because the insights from this deep dive, well, they could totally change how you approach risk and reward,
Hmm.
even in everyday life.
Absolutely, yeah. It's funny, right? The world of Forex trading, I mean, it can feel like this whole other universe,
Right.
but at its core, it's about navigating risk, just like we all do in different ways.
Exactly. And the video we're exploring today from the Inner Circle Trader really throws down the gauntlet right from the start. He claims that becoming a trading whiz, well, it isn't about some magic 8-ball accuracy. He actually says, and I quote, a relatively low accuracy rate could still be profitable.
Wow.
Now, that's a bold statement.
It is.
Yeah.
And what's fascinating is how much it goes against what most people assume. Like, you'd think you need to be right about the market most of the time to actually make money, right?
Right.
But he's highlighting the importance of money management, of having a system for handling losses just as much as wins.
So it's not just about picking the right stocks or timing the market perfectly. There's more to it than that.
Absolutely. Think of it like imagine playing poker.
Yeah.
Even the best players in the world, they don't win every hand. In fact, they're experts at knowing when to fold, when to cut their losses. That's what separates them from, amateurs who keep betting big, hoping for a miracle. This video is all about applying that same strategic thinking to the world of Forex.
That's a really interesting analogy. So how does this trader, the inner circle trader, suggest we approach this whole folding concept in Forex?
He dives into this really intriguing concept called flatlining drawdown. And the way he illustrates it with a spreadsheet example, it really brings it to life.
Okay, break that down for us. What does flatlining drawdown even mean?
In essence, it's about actively planning for losing streaks. You see, most traders get caught up in the excitement of a winning streak. They increase their bets, thinking they've cracked the code. But what usually
So
happens...
ceiling, I know where this is going. They lose big.
Exactly, and often they lose more than they gained in the first place. So flatlining drawdown is about counteracting that natural instinct to, chase bigger wins. It's about accepting that losses are inevitable and preparing for them strategically.
Okay, I'm starting to see why this is relevant even outside of trading. It's like that saying, don't put all your eggs in one basket.
Precisely. It's about risk management, plain and simple. And this video argues that one of the most powerful ways to manage risk in Forex is by adjusting your leverage, basically, how much you're betting on each trade based on a win set cycle.
Win set cycle. There's another term? What exactly does that mean?
It's actually more straightforward than it sounds. He defines it as 5 consecutive winning trades. Now, this number might change depending on, your personal risk tolerance and how you trade, but the core concept is this. Once you hit that cycle of wins, you hit the reset button.
You're on a roll, feeling like a trading superstar, and you hit the brakes.
In a way, yes. The idea is that you deliberately reduce your leverage, your bet size, even though you might be tempted to go all in. It's like a predetermined cooling off period, after a hot streak.
So you're not letting emotions dictate your decisions, even when you're feeling invincible.
Exactly. This approach is all about bringing discipline and pre-planning into what can often be a very emotionally charged environment. And the video then goes on to present 3 distinct money management models you can use to kind of apply these principles, each with its own pros and cons.
Okay, so we've got these 3 different models for Forex money management. Can you walk us through each one and maybe give us some real-world examples of how they might play out?
Absolutely. Let's start with the most conservative approach, which aligns really closely with this whole flatlining drawdown concept we discussed. Imagine you've hit your win set cycle, 5 wins in a row, and now it's time to adjust your leverage. In this model, you would dial it back to your lowest predetermined level, regardless of how confident you're feeling.
So even if I'm convinced, the market's about to skyrocket, I should still hit the brakes.
That's the discipline this model requires, yeah. You're essentially saying, okay, I've had a good run. Time to, lock in some profits and protect myself from potential losses. It's like a marathon runner. pacing themselves. They don't sprint all out at the beginning. They conserve energy for the long haul, right?
Makes sense. So what happens if you hit a losing trade with this approach? Do you stay at that lower leverage?
Exactly. You stick with your reduced leverage until you hit that win set cycle again. It's all about riding out those inevitable dips without getting rattled and making impulsive decisions.
It's like having a built-in safety net, kind of, for those moments when emotions might lead you astray.
Precisely. Now, the second model is a bit more moderate. It still involved adjusting leverage based on your win set cycle. But instead of like dropping to the lowest level after every cycle, you only reduce it if you experience a loss.
Okay, so you're giving yourself a bit more room to capitalize on those winning streaks.
Exactly. Think of it like this. You're driving down the highway and you hit a stretch of open road. You might speed up a bit, enjoying the momentum, but you're still keeping an eye on the speedometer, ready to ease off the gas if you see brake lights ahead.
So it's a balance between kind of capitalizing on opportunities, but also managing risk.
Exactly. Now, the third model is the most aggressive of the bunch. It involves actually increasing your leverage during winning streaks, but again, with a crucial caveat, you immediately revert to your base level if you hit a loss.
Okay, this sounds like it could get intense. What kind of trader might gravitate toward this approach?
This model is definitely not for the faint of heart. It's for traders who are comfortable with higher risk and have a strong understanding of their own emotional responses to market fluctuations. They're willing to push the envelope, but also have the discipline to, pull back quickly when
And
needed.
it's like walking a tightrope. Potentially big rewards, but also a greater chance of taking a tumble.
A perfect analogy. And that's why the inner circle trader emphasizes that there's no one size fits all when it comes to choosing a money management model. It's all about understanding your own risk tolerance, your trading style, and finding an approach that allows you to, sleep soundly at night, regardless of what the market throws your way.
So it's not just about the numbers. It's about finding a strategy that aligns with kind of your personality and emotional resilience.
Absolutely. He actually encourages viewers to test out these models using a demo account, a sort of trading simulator, before risking real money. That way, you can get a feel for how each approach impacts your decision-making process and your emotional state.
That's great advice. Now, I'm curious. The video focuses heavily on Forex, but you mentioned earlier that these concepts can apply to other areas of life as well. Could you elaborate on that a bit?
Of course. At its core, this video is about managing risk and reward, which are fundamental aspects of so many decisions we make, both big and small. And one area where this really resonates is like personal finance. Think about how often we hear stories of, lottery winners who end up broke.
Yeah.
They go on spending sprees, make risky investments, and before they know it, their windfall has vanished.
Yeah, it's like they skipped the whole managing risk part and went straight to like YOLOing their newfound wealth.
Exactly. Now, imagine if those lottery winners had applied even like a simplified version of these Forex money management models. What if, instead of going on a spending spree, they treated their winnings like a hot streak in trading?
Hmm.
They could set aside a chunk of the money as their, base leverage, maybe invest it conservatively, and then allow themselves to have a little fun with a smaller portion of the winnings.
Right.
They'd be protecting themselves from the downside while still enjoying some of the upside.
Right.
And that same principle can apply to smaller wins in life, too. Let's say you get a bonus at work. You could decide to invest a portion of it, knowing that even if the market, dips, you've still got that base covered.
So it's about bringing that same discipline mindset to our everyday financial decisions.
Exactly. And it goes beyond money, too. Think about decision making in general. We all have areas where we tend to get, a little overconfident, maybe even a bit reckless when we're on a roll.
Oh, tell me about it. For me, it's definitely my cooking. I'll nail a couple of recipes in a row and suddenly think I'm like ready to compete on Chopped. Spoiler alert, I'm not.
That's a perfect example. Now imagine if you applied the concept of a win-set cycle to your culinary adventures. After those first couple of successful dishes, instead of jumping straight into like a complex souffle, maybe you stick with simpler recipes for a bit, just to, stay grounded.
So instead of getting like caught up in the excitement of those early wins, I'm acknowledging that setbacks are inevitable. I'm pacing myself.
Exactly. It's about recognizing those patterns in our own behavior and putting systems in place to prevent, those big confidence-shattering crashes.
I love that. So what you're saying is, even though this YouTube video dives deep into like the world of Forex, Its core message about managing risk and reward is incredibly relevant to all of us, no matter what our, goals or aspirations are.
Absolutely. And I think the most powerful takeaway is this. By understanding these principles, we can not only achieve, greater financial success, but also navigate life's inevitable ups and downs with more resilience and peace of mind.
That's a pretty incredible takeaway from a video about Forex trading. So to our listeners out there, we challenge you to think about your own win-set cycle. What are those areas where you tend to get a little, too confident, maybe even a tad reckless? And how can you apply the lessons from this deep dive to make smarter, more strategic decisions in those areas?
Because ultimately, it's not just about avoiding losses. It's about setting yourself up for sustainable long-term success in all aspects of your life.
Now, that's something to chew on. This has been an eye-opening deep dive, and I hope you found it as valuable as we did. Until next time, happy exploring.